Hello, so welcome in this video. So we will take a closer look at the shares of John Deere. This name immediately evokes iconic green tractors and other agricultural machinery seen in fields all around the world. However, John Deere represents much more than just farming machines, as you can see here. In addition to large tractors and combines, they also manufacture lawnmowers, turf maintenance equipment, and comprehensive solutions for garden machinery. Moreover, the company focus on producing construction and forestry machinery, which finds its use in many industrial sectors. Thanks to its broad product portfolio, John Deere is I think, significant player in the machinery market, helping to increase efficiency and productivity across very and many various sectors. The company has a long history and wide product portfolio. It officially divides its businesses into three main segments: large agricultural machinery, smaller machinery, and garden equipment, and finally construction and forestry machinery. Looking at the revenue breakdown for 2024, we can see that the large agricultural machinery segment accounted for approximately $20 billion, while the other two segments brought about 10 to 12 billion each. Overall, this is a robust and diversified business, I think. It is important also to understand that John Deere is a cyclical company, meaning its results fluctuate according to the economic cycle. Currently, it is facing a downturn. Revenues in the last quarter dropped by 16%, and it is expected that in the next quarter the decline will be up to -20%, later around maybe -12%. Despite this, the stock reached a historic high, which is quite unusual. Earnings per share decreased by 22% year over year, and net profit by 24%. However, the important thing is that results exceeded expectations. Revenues were 3% higher and earnings per share 20% higher than the analyst consensus. Margins remained stable, which looks very good in the context of a cyclical market downturn. The drop in demand was caused by a combination of factors: lower incomes of farmers, weaker commodity prices, higher interest rates, making financing more difficult, and a market flooded with used equipment after the COVID boom. Also, global uncertainty and trade tariffs also played a big role, I think. And demand in Canada and the USA fell by as much as 30%. And as we can see here, it was similar in the Europe as it was in the Canada and the USA. Despite this, the stock remains strong, which is really fascinating. Today, it is more expensive than during the company revenues grew by 20%, reaching 52 billion in revenue and 7 billion in net profit. Now revenues are around 48 billion and net profit 5 billion, but profitability remains very strong. And important reason, Deere is massively investing in precision agriculture and digitalization. Their digital platform runs new autonomous tractors and combines, which are already being tested commercially. This technology reportedly increases efficiency by 20% and reduces fuel consumption by mostly 10%. So, what does it mean for us, for the passive investors or for investors overall. So from a passive investor's perspective, it is also interesting that John Deere is a stable dividend payer. The current dividend yield is around 1.3%, with the company following a policy of moderate and consistent dividend increases. The payout ratio stays between 25 to 45%, leaving enough cash for further investments, even in these really challenging times for everybody, I think. So, in conclusion, at the current price, entering the stocks might be, I think, risky due to short-term corrections. Ideally, it is better to wait for a dip or enter gradually, for example, using a dollar cost averaging strategy. If you believe in the long-term growth of agrotech, autonomous solutions, and efficient management, there is a quality and profitable technologically innovative company. So also we can look on some buying strategy or buying plan. I think this one maybe will be too severe for someone, but I think it's really safe. So when evaluating an entry point for John Deere stock, it's important to consider the company's cyclical nature, as we said. So at current validation, if the price drops below $320 per share, this presents a strong buying opportunity, I think. At this level, the stock would likely be trading near long-term support and a very attractive valuation, especially for long-term investors looking for exposure to this industrial and agricultural tech. So the price around 320 to 345 range is considered the primary buying zone. This range reflects fair value based on forward earnings and historically strong profit margins. It's a good point to initiate a position, particularly if the company continues to perform well despite the market headwinds. Between the price 345 and 350, buying should be done with some caution. It's also a good price to buy, but this range suggests the stock is still fairly priced, but closer to the recent highs. So investors may want to average in gradually using a dollar cost averaging strategy. And once the price reaches the 350, 370 zone, it's, I think, better to pause, and especially if the future earnings disappoint or the macro environment weakens. So finally, anything for me above 370, maybe $400 is considered overvalued unless there is a strong catalyst such as major growth in autonomous equipment or precision agriculture tech that justifies this breakout. At that point, it's best to wait for a correction for me or clear evidence of sustained revenue acceleration. This tiered approach helps manage risks while giving you structured entry points in the strong but really cyclical company. So for me, as you can see also on this graph, we are heading to the all-time highs for this stock. So I think for me now, this really quality stock is not for buying now. This stock is in my portfolio now, but from the past buyings with the better price. So if you want to step to the market now, I think for the John Deere company, we can a little bit wait. So thank you for your attention, and if you enjoyed this video, don't forget to like, subscribe, and maybe write me your thoughts about John Deere.